Welcome to Pitch Deck Clinic, where today I've got Arun from Fuudies. Now, you know when you're at Heathrow Airport and you're desperate for a snack and there's one of those awful vending machines that's got horrible sugar-filled, salt-filled things, and you wish, couldn't this say something with some decent, healthy food? Well, that's exactly what Arun's been doing. So he's got this amazing new vending machine that seems to do hot, fresh food, and I love it. So what we're going to do is over the next 30 minutes, we're going to explore the deck. We can explore the idea, look at the key things that are the business drivers, the challenges, how will we deal with the logistics. But first, let me hand over to Arun, and Arun, give me the 60-second elevator pitch.
Hi, this is Arun. I'm the founder of Fuudies. We founded Fuudies last year. We were delivering ready-to-eat meals to offices. And I found that model was still not scalable in the way I want the business to scale. So we've been delivering it to lots of corporate companies with 200, 300 staff. Only 10, 20 people were buying from us. So I went back to started thinking, how can all the 200 people buy the food from us? So, and then we came up with the concept of food vending machine, which is like never been happening in the UK. So we went back to a manufacturer in London and we built the most intelligent, most advanced food vending machines, which we are going to place in offices, corporate offices. Say you have an office for 100 people, you have a canteen, people go out, they don't get the good quality food. So what we are going to do is we are going to place these vending machines in your offices and you get food 24/7, freshly cooked food. By us, a professional chef as well. So we cook everything from in-house and then we stock the fridge and people can get anything from breakfast to brunch, from healthy soft drinks and everything. All the food is available 24/7 to officers. So this is the new thing which we want to introduce into corporate companies going forward.
Sounds great. And you know, you are the chef by background. So when I look at founders, some of them are tech people, some of them are ex-Goldman Sachs bankers, and some of them, you know, it's the doctor with the dialysis machine. And in this case, the chef with a passion to, I guess, bring a more scalable model of delivery and so on.
That's
so
right.
Let's dive into the slide deck. Before we do that, tell me the 2 or 3 key things that you'd like to get out of the session. What are the key challenges you're finding from feedback to the deck or from investors that we can try and help with?
The key challenges which I'm finding right now after post-COVID, before the close down, when we started selling the concept of food vending machine to corporate officers, we got literally like 10, 12 companies very, very interested in it. And then we got the contracts and everything happened and COVID came. Everything got shut down for 3-4 months. Now, after the post-COVID, it's becoming very difficult. Even companies, they don't know what they're doing, and it's getting a little bit difficult. I think it's a time game. We need to wait for another few more months for companies to operate back in action. So I think getting the clients back into buying this concept is taking a little bit more time. So that is a little bit of a challenge for now, but I think it's a matter of time. We need to wait. And coming back to investors, because it is a completely new concept. What we're doing is creating a wedge in the pie in the food to go market, which is a food vending machine. It's a massive thing. Until it's a proven model, it's getting difficult for me to convince investors. As much they love the concept, they love the technology, everything, they just wanted to see a machine at least working in 1 or 2 places for me to prove the business model. And initially we're looking for the initial pre-seed capital for us to go into, invest into a little bit of the machines, the technology, finding the staff. And that is what finding it a little bit challenging at the moment for me.
Okay, so let's dive into the deck. Let's take a look and let's see what if we can come up with any ideas. So Fuudies, future of food vending. So I love your play on, FUD everywhere. Sometimes it crosses over from being, the brand to food. I think the first screen, however, I would have expected probably to see the machine and some fresh food. So I think the futuristic London corporate thing might be not quite the right establishing shot, but the graphics throughout are really nice. So I think, you establishing that we all are buying into the proposition that, at lunch, are you going out to find thing? Do you have some in-house canteen? And I think we all agree, everyone who's worked in an office, unless you happen to be Google, who's got this lavish buffet, that the food can be wanting. So so now, the slide deck, and we won't spend much time on the deck because I think it's actually really good. You're establishing the problem in the past, empty stuff, awful chip packets, and now you cut to, what you are doing, which is different. So the machine, by the way, looks a bit like two machines, but you've got the screen on the one side and you've got the food on the other side. And I think this looks, I'd probably just have the word introducing maybe, so that, people go problem, ta-da, solution. And it's sort of shining out, maybe there's some rays that come down on it if you want to have some fancy graphics. But I think the introduction of that is just fine. So next slide. I'd probably lose the semicolons everywhere, a minor thing. And, so again, you are on the story of what is the product, establishing it's about, a combination of tech and healthy. I think this screen could have been done a little bit better, because if you imagine everything is in your slide deck, it's a drama about how, the awful food that you would get in the office or wherever, your factory or whatever it was, and how you can transform it. I think this is a bit, you force me to work on figuring out what this is. So this is perhaps different use cases. And if it is different use cases, you could show me a few different pictures, again, keeping a graphic theme. It's over here, or it's in an office or an industrial estate, and so on. So we now come to the bit where, of course, I'm probably bought into the concept, and I agree with the proposition, but I think, it's a small market. And now you're going to show me it's actually quite a large market. So let's take a look at this. So you've got your projection. So this is actually not quite the market. You're now showing me your projected revenue, and you might have missed a trick by not establishing the size of the market first. Maybe that comes on the next slide, but I think at this point, I would like to see that food is a 10 billion a year, or whatever it is, market. And now you're going to show me how you're going to eat more of that, so to speak. So let's take a look. So year one, 130 companies, year two, 5, 10, 20%. Okay, so you're saying 20% of companies are going to have your machine, which is quite high, quite ambitious. Let's see how that plays out. So high street shops. So tell me what high street shops mean. Does this mean on a given high street?
Well, this is more like unmanned retail shops, more like an Amazon Go. So what we are trying to do is we are trying to get a shop which is open for 24/7 with fresh food. Anyone can walk in. Our vending machines are going to be there. You can just buy anything you want at any point of time.
Okay, so this is where you're saying these are really the foodie self-service shops,
Correct.
Which might be worth mentioning there. And then foodie, industrial estate shops, so people understand the difference between the machine and the shop. Okay, so now you're saying that you're going to be in at different universities. All right, so now comes the contract value, and of course, by year 5, you've got quite an ambitious target. So were you to get 200 million a year in revenue, that would be amazing. Of course, this would be something that an investor is definitely going to deep dive in, because those are super ambitious numbers. So in particular, year one, the challenge you have with year one numbers is if it takes you 3 months to get to talk to investors, another 3 months to close a round. Several months in, investors are going to start asking for some data to support that. So always be careful with
the number. What we actually meant is, like, the way we are working is we are going on a 2-year exclusive contract with companies. Say, for example, if there's a company got, let's say, 100 people, and we are taking a 2-year exclusive contracts. And the way we worked out this contract value is we are working on a 30% occupancy from the 100 people, assuming only 30 people are going to buy our food at an average value of £3.50 a meal. And we worked out, for a 2-year, what is going to be the contract value for that particular company. So the 6.9 million will be the total value of the contract for that many companies, 138 companies.
Got it. And I think that's perfect. But what I'm suggesting is that you've modeled this for now on a spreadsheet, but as you're talking to investors, as the months go by, of course, they're going to be saying, so how far are you towards that 6.9 million? Because now you've got the proof 6 months in. So if one is quite ambitious on the year one numbers, you might find, and nothing personal to you, this is just in general in slide decks, you start finding that the proof becomes, or the disparity becomes evident between what you've really got and what you projected, and then investors look to scale that out over the following years. So you might want to make sure the numbers are updated if the funding round is taking a while and so on. Okay, so competitive advantage, you've changed color here. I always look to pick out any minor detail. So
just to break the ice to a different color, yeah.
Okay. All right. So I must say one thing I think you might want to put in the deck is anyone who's been to Japan will know that Japan, is the land of self-service machines, anywhere from, underwear to food to whatever. And if you go to Amsterdam, there are a few, vending machines for food and so on as well. So you might want to play on the fact that, this is, in fact, in other parts of the world, there's nothing unique. It's not like you're trying to disrupt or change something. It's not like people shouldn't buy into the fact that people won't want vending machines with nice hot food, just that this is a unique UK opportunity. And maybe even show some of the amazing vending machines that you'll find in Tokyo and so on, to show that this exists. Okay, so now I'm thinking, as the investor, this sounds great. Making one of these machines sounds like a very expensive proposition, but we're going to see that in a moment exactly what the machine is. Okay, so now I think you're probably, in terms of the story, telling me a bit more about why people want it before you've quite got to exactly what it is. I like the little emoji. I like the, I think burger vans might often, maybe I might think, have a, more happiness, and local shops have got a less happiness. But I think just some of the branding on this page could be a little nicer, but otherwise it's fine. All right, so now you've got the achievements in 4 weeks, and I think this one is a bit of a challenge for me, because firstly, 4 weeks, of course, this slide deck needs to survive some weeks or months while you find investments. So 4 weeks starts becoming, more than 4 weeks. And then also you're showing a bunch of things are on hold. So clearly, I think what you've got here is quite interesting, which is some companies, COVID doesn't really matter. If you're an online SaaS business, it's business as usual. Some, like a gym, you're out of business or on hold. And here you're playing the middle, which is showing an advantage compared to other solutions for COVID. But of course, if it is in office, you require people to be back in office, or so this is the sort of duality of it. And now this is what you are essentially bringing to light in this slide, which is you've got most of the deals, on hold. So if you are an investor and you see the slide, I think the outcome from me might be, this looks awesome. Clearly the business is sort of sitting, waiting for companies to be back again. And as soon as they're back again, it's all set to take off. So now, should I wait or not? Should you use this time to develop the product further? Will I invest now, preemptively, or will I wait? I'm a big fan of procrastination is not an option. So how do you show people that this is the right time to invest, perhaps, so that when people are back in the office, you've got that solution and you can capture a market advantage? The slide might lead to maybe the opposite, which is, most things are on hold right now. So, you might want to reconsider the slide, at least, maybe the title isn't about the achievements in 4 weeks. It might simply be another title, which is, great interest, poised for return to work.
Okay.
Would change that. Okay. And then I think, the other thing is sales in 5 days sounds good, but there's a disparity between the 5 day, the £1,000 and the £6 million for year one. So I would expect that, 5 days would be 5 out of 365 times, 6.9 million, which I'm guessing is more than 1,000. So I think those numbers, having established on the previous page what it is, I would be, as an investor, exploring that disparity. So you might want to...
Just for one company, though. So.
Right. So you might then show, alternatively, the value of all of these companies and show that some of them are on hold, ready to pick up, but that £1,000 is now actually £20,000 or whatever it might be. But of course, this is waiting for them to be back in the office. Okay. So I think the graphics on the slide don't do it for me, because you've shown me beautiful food, and to show me a virus is setting me on the wrong thing altogether. So I think that this would be a picture of maybe one of your machines and somebody standing in front of it, with facial recognition, not touching it would be the thing that entices me, rather than germs and food, So here, of course, you are now diving into both the investor concern and the opportunity, which is things are changing. Is this something that I should hold off investing in you? Or are you showing that you're completely onto this and you are going to have a competitive advantage? So I think you've gone more than I would have expected into the COVID-related points on it, indicating to me as an investor that either this is a passion point or you're intentionally addressing it because you're getting some market feedback that you have to address it. So I'd be careful about how much you tease this out, as opposed to it's just a great machine that gives good food. The fact you focus on this, to me, starts raising it more as an issue. But either way, I think the slide's great, but I would have, suitably nice graphics. Okay, so now I think, we're at chapter 5 of the story, but I think chapter 5 should be chapter 2. So you've shown me the market, you've shown me the advantages, but you haven't shown me what the thing is. So I would bring this forward. So, it looks nice. You've got clean, which is green and so on. The machine looks great. Maybe some, gradient to show that this is, ta-da, beam down to planet Earth. But walk in, pick up. I think the walk in, by the way, is maybe not relevant here, because that's one of your use cases. But if it's in an office, maybe it's just, walk up, pick up, go, something like that. Okay, so now I think showing it in the office is great. What's interesting is when you look at this, you go, hey, nice office. Why are you showing me this picture? Oh, wait, your machine is in the background. So I think what you might want to show is, Fuudies for your office. And the next slide, I'm guessing, is going to be Fuudies for something else. Let's take a look. So I guess this is also office. So maybe it's in the office, then this is Fuudie, at reception or something. And okay, so these are all the right slides to have at the beginning of the deck to show me what it is. And I really like it. I think, by the way, the branding that you've done shows amazing ambition, and I love it. You're showing me it's not just the machine, it's the whole progression. And to put this all at the beginning of the deck, I think would be way more powerful. So this, of course, also is really good. But of course, for me as an investor, it's a double-edged sword, because when you showed me the machine, my investment was clearly going into some tech development, and there was probably going to be quite a lot of capex to develop the machine. But then very quickly you would see an uptake or not based on that. But that's an altogether different ball game from the very significant capex and longer term play.
This is what we're planning in after 5 years. So I'm just giving some a vision where we are going from where to where in 5 years plus.
Okay, so let's dive on that, because I think that's super important. So what I often see, and a key challenge for you as a founder, is you're trying to do two things. You're trying to make a viable business in the amount of investment you can raise right now, but you're also trying to get investment, and for that you want to show the investor a bigger vision. The problem is, if the two come together in the slide deck, and for most companies that have mobile apps and so on, I see the pitch deck saying, we're going to do a B2C, we're going to do a B2B, we're going to do, sell data, we're going to have a data warehouse, whatever it might be, we're going to be on blockchain. All of these together for the founders sound like a win. But for the investor, they just go, that's a drain on money, that's a drain on money. So what you want to do, in my view, is very clearly show this is what we're doing on phase one. And when we get there and we cash flow positive, or we have success, or whatever it is, then this is the future. So I think signposting my investment money will go to fund this. And then when we get success, by the way, this is our vision. So make it clear which my investor money is buying, because I'm in for funding the machine. Not sure about quite yet taking on Shell and BP, for what look like service stations. And by the way, I would not be surprised, and maybe it's a really clever or maybe a complete diversion, that this shows electric vehicle charging points as part of this. Is that something you've considered?
Yes, yeah.
Okay, so that might be a diversion, but might be interesting, right? The future is no petrol and no people, and eat good stuff while you refuel your car too. Okay, so I would probably have looked to see some pictures of foods here. So, I mean, clearly for me, the model might be the Deliveroo or Uber Eats app, where I'm seeing a menu of nicely presented food, but instead of a person on a bike coming to deliver it, it's right there in the machine. So to create that familiarity, you might, just as a visual suggestion, think of that. All right, so of course, at this point, I'm thinking, this is awesome. This is exactly what I want. When I get to the next airport and see that crappy, chips and Coke machine, if I can get this, I love it. Of course, I'm also thinking, how's the stuff going to be fresh? So you've told me that, the machine's going to be connected to the internet and it's going to have smart ordering. I'm not sure if I'm going to see this on the next pages, but at this point, I would expect the next slide to be showing me how you're going to make sure the food's always fresh, how the intelligent delivery system changes everything, and let me see. Almost. So I think I would probably, by the way, lose the slide because you've shown me the future and now you're taking me back to the past. So I'm not sure that this is helpful going, oh, by the way, we can also do Coke if you want it. That's not adding a USP. All right, so we've now gone back to from what it is and why I want it into, you know, KPIs and things like that. And I think if you move the other slides forward, maybe this is here. So this is your goal and your rollout. I won't dive into this now, but as the investor, I would be looking to spend some time with you to make sure that these numbers match the projections you've got on the other page. So I'd probably take out my calculator or do my mental arithmetic, look at the cost of the machine, the meals, work out the numbers. Some investors invest on a whim, on a passion. They love, you're a foodie and you're changing this, I'm in. Or they look at it as a pain point, or they look at it as a lifestyle. But some investors are very maths driven and they'll go machine, food, you know, whatever, show me the numbers. And so be prepared for the investors, you know, to deep dive on this. And I'm guessing you've run the numbers, but the numbers need to survive some fairly, you know, careful inspection, you know, a la Dragon's Den. Any questions from you? Anything you would like me to get back to before we move on?
No, it's perfectly fine. I think we are just touching the right points.
All right, cool. So now your financial projections. So, you know, I said on the previous slide that the numbers are, you know, great and very optimistic. So 270 million after year 5 is definitely at the upper end. Now, clearly, you know, it's not just SaaS revenue, it's product sales, so it's slightly different. But anytime I see a curve that is an exponential growth, this is something that investors are really looking for, but it also is something that invites challenge. So let's take a quick look. So you've got revenue. So here you're showing revenue on year 5 as 84 million. But a couple of slides ago, there was a number of 270 million that was shown.
That was the contract value. When we get a new company in year 5, let's say we get 100 companies in year 5, the value of the contract.
So and that contract is over 2 years?
Over 2 years, yes.
So I would imagine that would then be 2 years worth of revenue.
2 years worth of revenue, yes.
So the 276 is going to be the year 6, which would be 160 million plus the year 5. So that gets me to my 270.
That's right.
Okay, so probably important because, you know, you might have investors looking at that. All right, so your cost of sales, gross profit. All right, so now you're showing me here, which is going to be key for what's going to come up and my guess for the next slide, which is how much investment you're looking for. So you're showing that you're losing, or you're underwater, 400K on the first year and another 100K on the next year. So you've got 500K or whatever. So this will indicate how much investment you're going to need before you get to profitability. And then you're showing me a giant swing by year 3 where you suddenly are very profitable. So I would, as the investor, be looking to kick the tires because I see this as a capex heavy business, that how much will I be diluted by the amount you're looking to raise? And then if I see it swing to profitability too soon and too fast, of course, that's awesome. In theory, we love that, but it also, in any tech business, you're normally putting more money into R&D and you're normally building out more things, and those shops that you were showing and so on you're going to start eyeing it. So I'm probably going to be kicking the tires on that as well. Why aren't you starting to spend more money on R&D to get it into more places or more on marketing and so on, so that you're actually using some of that profit to plow back into the business? Okay, so that again is something that you want to show sort of as a variable. You might show best in a optimistic or a realistic use case or something like that, and how you then will build those forecourts if the optimistic is reached, but not if the realistic is reached, something like that. Okay. So exactly as I predicted, on the next slide, you're getting to how much investment you need. So you're looking to raise 650K. You don't need to, but if you want to tell me what valuation did you have in mind? Oh, sorry, you've already told me here, 4.7 mil. And in fact, last night I took out my calculator and ran the numbers, because many founders make a mistake on the dilution. And in fact, you haven't. So that's great. Often people will divide 4.7 by 650, or I should say 650 by 4.7, but in fact the dilution is going to be 650 divided by 650 plus 4.7, which you've done correctly. So you're showing me, I think in one slide also very nicely, what the money will be used for. And I think, by the way, this is really good. So let's quickly dive onto that. So usually for a startup, by far, the majority of the costs are in staff. So here you're buying assets. So let's talk about the assets that you're buying. Where's that money going?
The asset is for the vending machines.
So you're buying the machines.
Yeah.
So you've got no money here for R&D. So where's the R&D, or rather, is that the staff costs? And are the staff costs, you've broken out sales and marketing, you've got some operating. So tell me more about the staff. So where I am as the investor is, I'm thinking, this sounds great. Are you developing this machine yourself? In which case you've got a unique advantage, but all that facial recognition is difficult stuff. It took Apple a while to get there. And is it going to be a risky investment because of the R&D, or are you licensing someone's tech?
We are not spending much money on R&D, because all the software and hardware we outsource to another company. So all we need to tell the company is, if you want to build any new technology, we tell them what we want and they build and give it for us. And the machines, they build the machines as well. So all the staff cost which is coming in here is all about how many chefs we have, how many drivers we have, how many sales and marketing staffs. This is purely an operating staff cost. So all the technology is outsourced.
Okay.
So that goes completely into the asset purchase.
Okay, all right. So I think what would be useful, because for sure investors are going to dive on it, is what is the intellectual property that you own? Because if the machines are generic, then of course, the IP is all about the distribution model, the business, the food, the ordering system, and so on. So talk to me a bit about so the machine is acquired. The machine is going to talk to a back-end server, and it's going to communicate when it needs restocking and so on. Are you building that portal, or does the machine manufacturer give you access to that?
The machine manufacturer does that.
Okay. So from my investor perspective, I think you've probably considerably de-risked things, because you're not building all this fancy stuff yourself. But on the flip side, you're reducing the barrier to entry for others, right? Someone else can get in there and do that. So, the essence of your business is not going to be the value of the IP on the machine. It's going to be a combination of the distribution that you get as a speed to market. It's going to be your menu. It's going to be how you iterate based on consumer feedback. It's going to be your A/B testing. It's going to be the way that you work with companies to create the ideal menu for their team. And so maybe I would like to see a lot more of that teased out in the deck, to show that make it clear that you're using existing hardware, which of course is continued to be developed. Are you reliant on a single source of that hardware, or can you switch hardware? How are you, maybe I would love to see that there's a picture of, you with a clipboard, or one of your team going to each new customer to evaluate what sort of food that they are looking for their team. Maybe you've created several different categories. So what you're doing is you're showing me that you really know the market and you've got a great solution for different markets based on talking to the customer and so on. And then you maybe I'm getting ahead of where I should be on this pitch deck clinic, which is, I can never help myself, suggesting someone else's business, but it's really where you're going is food as a service. And food as a service, just like software as a service, is a rapid iteration of what the customer wants to improve your product. And there's a delivery vehicle, which is either a website or a machine or a transport network. And so perhaps even taking the deck a step further, which might be a step too far, I don't know, which is Fuudies, food as a service delivered through these machines, but the machine is actually only a small part of it. Maybe that's where I'm going on the soliloquy, where the machine's a small part of it. It's actually the owning of the customer and the team, the staff, whatever it might be, the people going through the airport, come together through your back-end portal to service exactly their needs delivered through the machine. Was I on a complete tangent there, or was that of interest?
Absolutely. I mean, I just wanted to add one more thing. I mean, this pitch deck was done sometime back, a month back. And
I love it sometime back. A month back. Yeah.
We've also started building something called Fuudies Digital Fridge on top of the vending machine. So the Fuudies Digital Fridge, it's a simple fridge, which is mostly we are targeting companies anything less than like 30 plus staff. So whereas the vending machine, we are targeting anything from 150 plus staff. So we are missing a big market from 30 to 150 staffed companies. So we started building a Fuudies Digital Fridge. So it's a simple fridge with the same technology, with the facial recognition, and we will have all the food in the fridge. So you just walk into the fridge, the machine authorizes you. So you open the fridge, take whatever you want, close the fridge, and then you go. You'll be charged automatically. So this is something which you are building right now.
Okay, so I'm delighted that my random suggestions of food as a service, in fact, exactly aligns with that, because you're already saying, the machine is not the be-all and end-all. In fact, almost getting rid of the machine is interesting. It's the fact that maybe even the next step will be that the company already has a fridge and you're just going to stick your display on the front of their fridge.
The fridge is custom built for us because it's got all the computer system and everything. Instead of a big vending machine, it's a small fridge.
Yes, but who knows? Maybe your next step is you can even reduce the cost, the transaction cost, by saying, let's just use the company's existing fridge and let's stick our display on the front of it. And that will tell us who is buying what. And since you've got a trust model that they're going to take it out of the fridge and the company's going to pay, who knows, right? So clearly what you're doing differently to feeders or others who deliver food to you is yours is an always on platform, but the cost of entry is the company needs some hardware installed. If they didn't need the hardware installed and you didn't need to spend money building the hardware, that would reduce the friction. So how can you go further? And maybe you will with time. We'll see. Sorry about suggesting all of that. All right. So now you've ended off with, I think, a black slide. I would have expected, ta-da, a happy future slide of a shining, beaming down machine and a steaming bowl of nice ramen or something like that. So I think I'd probably lose the words about, get in touch if the revolutionary, it's a bit, try hard. Contact a member of our team. Well, the only person you've got there is you as the founder. So, and investors only want to talk to the founder. So, we'll be looking forward to hearing from you is kind of the thing you put on an email when you probably don't expect people to hear from you. So, the regards is cute, and and the team is great, but I would probably have put at the end, which is maybe something about a time imperative, looking to close by whatever, would love to tell you more, Arun, my details, and then, some nice product shot. So I think, really nice deck. It inspired me to go off on a big tangent. Let's get back then to, from this, what are the key problems that you have, and how might we spend a few moments, helping on those?
The biggest problem I have right now is after the COVID, companies are taking their own time to open up, which is kind of delayed the whole operation. I think it's not just me. I think everyone is in the same boat.
Right.
I think it's just a matter of time. We need to wait and see if everything is kicking back. And that is one of the problems which I'm facing right now. And obviously, to raise money as soon as possible to build, even if the companies are taking a month and a half, or 2 months, I want to make sure within the 2 months we are ready with the infrastructure. Because in 2 months down the line, if 20 companies are interested, I want to be ready right now with enough funding, because each machine takes like 3 months to build. So I wanted to make sure I have enough hardware and software, everything ready to be in 2 months' time.
Okay. So I think as the investor, there'd be two things going through my mind. One, is it just, will companies be back in the office again? In which case we just need to decide if it's some weeks or some months, right? It's just a matter of time. Or two, fundamentally, will companies not be back in the office? So if I look to my own office, I've got a very nice office, completely unused. A few of the team are, dribbling back in again, but they show no great inclination to be back again. And I don't know if we'll have an office in the future. So that's really the space that you're now playing in. And I think, since nobody knows the answer, clearly your goal is to try and de-risk it, to show that you've got a strategy that, maybe even if a third of companies come back again, that's just fine. You'll just deal with a third of companies. Maybe that's your different market size, showing how.
Speaking with a student accommodation company recently, they love the idea, and they've got 15 student accommodations across London, and they wanted to have our machines in all of them. So this is a conversation which is happening at the moment. I mean, things are taking time, but companies are interested. They love the idea. We've been speaking with Hermes Logistics, and they want to put our machines. And there's quite a few companies very, very keen, but everything is taking time. So,
all right, then I think the last comment from me then would be, there are many companies that are obviously affected by COVID, and then what I'm looking for when I see a founder is, are they in the waiting game, or are they in the game of, shit happens, here's how we're going to deal with it. So if they're in the waiting game, then as the investor, I might also be in the waiting game. Great, come back when you've got it sorted. So what I'm looking for, where I'm going to place my investment money now, is the companies that are good to go now. And that means you're either going to show me you have to do the R&D or whatever it is now, or you've got some companies now, or you're going to take advantage of the situation to have a unique offering that is worth investing in now, so that as things pick up, you'll be in the right place. All right. Anything, was this useful on your side?
absolutely. Yeah. Thank you so much. It was very, very useful.